Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Tuesday, November 18, and this is your London Open Prep. Markets are leaning risk-off into Europe as tech jitters and a crypto slide weigh on sentiment, while in currencies and commodities, we're seeing a classic safety shuffle with mixed follow-through, and a few idiosyncratic stories in energy and trade to watch. European stocks are set to start lower as worries around artificial intelligence names ripple through global tech. That follows a weak Wall Street close and a sharper drop in Bitcoin, which has broken below key levels and is now testing the 90,000 area. A sign deleveraging is still running. For traders, that matters. It tends to make investors more defensive across the board. On policy, Japan is in focus. The yen has stabilized after hitting a 9-month low, with officials sounding more alarmed about rapid currency moves and the Bank of Japan's governor meeting the prime minister later today. That raises the bar for outright yen weakness near term, even if the recovery lacks conviction. Meanwhile, the US dollar index is steady as markets await the long-delayed restart of key US data. And in Europe, the euro is drifting after a recent pop, while the euro-sterling cross holds near recent ranges as softer UK growth keeps rate cut talk alive. Energy and metals are painting a more cautious picture. West Texas crude has slipped, with fresh oversupply projections overshadowing geopolitical sanctions risk. Gold and silver are extending their pullback as hopes for quick Federal Reserve rate cuts cool, with gold hovering just above that 4,000 mark that many watch as a psychological line in the sand. Yet, in liquefied natural gas, freight rates on the Atlantic route are near a 2-year high as Europe tops up storage below its winter target, keeping U.S. export flows brisk, a reminder that not all commodity lanes are soft. One other angle today: India's goods trade deficit hit a record as gold imports surged into festival season, while U.S. tariffs pinched exports. The rupee opened flat, but that import mix underscores how local demand can diverge from global price pressure in precious metals. Turning to markets and sectors, the tone is defensive. Tech-led weakness is weighing on equity futures, and that's supportive of a more cautious bias in currencies. The dollar is mixed rather than broadly stronger. It's softer against the Swiss franc after headlines around a U.S. Swiss tariff understanding and a steady Swiss National Bank backdrop, but firmer versus high beta peers when risk appetite fades. The euro-dollar pair is consolidating after a push higher. Sterling remains heavy as fiscal plans shift and growth slows, and yen moves are sensitive to any hint of official pushback. In commodities, crude looks capped by supply narratives, while gold and silver are vulnerable if rate cut expectations continue to fade. Looking ahead, the calendar is relatively quiet, but the Bank of Japan meeting with the Prime Minister could be a headline risk for the yen. Beyond that, the market is braced for the return of U.S. macro releases in the days ahead, including jobs data, and for any policy remarks that might reset rate expectations. Keep an eye, too, on the ongoing AI and crypto narrative, which is now steering broader risk mood. As for my watch list today, I'll be watching dollar-yen for two-way volatility, with any hint of intervention rhetoric capable of flipping the intraday trend lower. I'm watching euro-sterling for a gentle uptrend bias if Bank of England cut chatter persists. I'm also watching dollar-franc for a softer dollar tone on the tariff headlines, and Aussie dollar where bounces may struggle if risk sentiment stays weak. In commodities, I'm focused on gold around the 4,000 level for a potential break, and on U.S. crude with a bias lower if oversupply headlines keep building. The takeaway: markets are cautious, not panicked, but the balance of risks is shifting toward defense until policy clarity and earnings confidence return. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.